All right, so look, I've been trading for 12 years. Never have I ever traded as good as I trade today, and it is all thanks to the strategy that I'm about to show you. No fluff in this video. This entire video is going to be pure strategy talk. I'm going to show you a couple of examples on the charts. Then I'm going to show you a couple of live examples that were recorded, so live trades that I was actually in, walk you through every step of those trades so that you can literally learn by example, right? Because you don't want to just teach, you got to do, right? So we're going to look at exactly how I trade, the strategy that I use to get results that look like this, put them all up on the screen. No more fluff. Let's just dive right into the video. One take, baby. Here we go. All right, so the strategy that I trade right now, I'm still working on a name for it. It's relatively new, but it is absolutely mind-blowing how well it works. I like to call it order zones, okay? And it's very simple. There's nothing new under the sun. It's not like I've just reinvented the wheel. It's just combining two simple concepts and a few other things to just create this framework that is very logical and simple, no indicators, just pure price action, all right? So what is an order zone? An order zone is basically an area or a price point on the chart where there are a lot of orders sitting, right? It's called an order zone. So there are two main theories in the market that can help us find where orders are sitting. Supply and demand, so supply and demand, S&D, search and destroy, and liquidity sweep. So supply and demand is basically a point on the chart where price kind of contracted, right, kind of squeezed in on itself, became relatively flat, and then all of a sudden we get this massive move higher or lower, okay? When we get a massive imbalance to the upside, a big move higher, we call this demand, okay? When we get a massive move lower, we call that supply, okay? Think of demand as support, supply as resistance. So in this case, our demand level is going to be this area right over here, okay? This candle right here. That is where price had a consolidation before we saw a massive imbalance to the upside. I'm not going to get into the nitty-gritty of why this creates a bunch of orders, but all you have to know is that this creates an imbalance in the market, and so the market will come back in, retest that zone, fill those unfilled orders, and then continue on higher, or if it's a supply zone, continue on lower, okay? So that is the idea of supply and demand. If you're confused, don't even worry about it, because we're going to go through so many examples. By the end of this video, you're going to be tired of hearing the words supply and demand and liquidity sweeps, okay? So now let's talk about liquidity sweeps. Liquidity sweeps, if you don't know, once again, you'll know by the end of this video. But essentially, liquidity sweeps are literally just highs and lows. Everybody wants to overcomplicate it. It sounds very fancy. But the idea of what happens at these highs and lows is what's important. The idea is that orders are being put below lows and above highs. Why are orders being placed there? Because they are stop loss orders, okay? If you are buying anywhere in this area here, okay, what is the average trader taught to do? They're taught to put their order in a safe spot. Where's the safe spot? Below this low right here, okay? So that's where stop losses go. If you're shorting anywhere in this area, where are you going to put your stop loss? Above these highs, right? So it's this idea that we have stop loss orders resting below and above highs and lows. That is important to remember. And even more important is that the market will usually stop out retail traders before making its next big move up or down, okay? That's just how the market works. 99% of traders lose. Why do you think that is, right? 99% of traders get stopped out, and then the market goes in their initial direction, okay? So liquidity sweeps and supply and demand basically gauge where orders are in the market. Now, how do we combine the two to create what I like to call order zones, okay? Zones where there is a high probability that there is a high density of orders sitting at that area. Well, luckily for you, I have an example right here, okay? We have an area of demand right here, okay? Area of demand right here. And I should probably mention, we're in an uptrend, so we're looking for buys. It's as simple as that. We have this area of demand, but now I also want to see an area of liquidity, okay? Now, in this example, where do we get that level of liquidity? You may think right here, okay, right? Because that's a previous low, so there are stop losses resting below that low maybe. But no, that is not right because it's a little too far away from the actual demand zone. Remember, these are order zones where orders are overlapping. So the idea is that we want to have a low right at that level of demand. It can even be inside the level of demand, which it actually does do that here, okay? Because we don't put stop losses. If you were long here, you're not putting your stop loss down here, right? You're putting it right under this low. So you're really not going to have much overlapping of orders in the exact same spot, right? You're going to have orders up here, and then you're going to have orders over here thanks to the demand. But what does end up happening is we test the area of demand, and then we create this low right here. Now that is now an order zone. So we have this demand zone, right? And then we have just created a new low here, which now creates liquidity. Stop loss orders go below this low. And this is now a valid order zone. Where would I look to buy? I would look to buy beneath this level of liquidity in this gray zone, which I again call the order zone. We have stop losses sitting here from these resting orders that are below this low, the stop losses, right? From people that are buying in this area. And then we also have the unfilled orders caused by the demand level, okay? So now this is a valid area where tons of orders are overlapping and you have a high probability chance of seeing a reversal, okay? And that's exactly what happens, all right? So I know you're still probably confused. Just hang in there. We're going to go over many more examples, all right? Now, before we continue on into the video, I just want to mention that we do have a free Discord where I post these order zones every single day. All right, if you doubt that this strategy works, we also have this profit section where I always put in my end of day P&L. So at the time of recording this, here was my P&L for this day. And the zones were all sent into the key levels. So if you want to learn more about the strategy and if you want to just have a good community of real traders in general, feel free to join the Discord. Link is in the description. Now, I also want to mention that when I trade these order zones, there is something important to remember. These areas are supposed to be very, very, very strong areas because many orders are sitting there, right? There's only one thing that moves the market, guys. Orders, okay? So if you have tons of orders sitting in an area, is price just going to blow through that area or is it going to reject that area? It's going to reject it. So knowing this theory, this framework that we're trying to get into these high probability areas, we want to use a small stop loss. So for this, I use the ATR indicator. You can see down here, this is the ATR indicator. And I have it set to 7, okay? Basically what the ATR indicator does is it tells you on average how much is one candle going to move, okay? In this case, I have it on 7, and so if we were to go over here where we would enter, right around here, okay, the ATR was 16. So what I do is I use a 1 ATR stop loss. So that 16 is going to be my stop loss. I measure out 16 points from my entry, okay? And your risk to reward looks something like this. You have an entry here, okay, risk basically at the end of the zone, and then you target the highs, okay? This is a trend following strategy. All right, so you can see you get really nice risk to reward here. This is actually not even a great example of a good risk to reward trade. But the key, as well, as we'll see later in the video, is that as soon as price goes in my favor, I pretty much go to a break even or at least tighten my stop loss. So for example, if I wanted to give this trade some room but still wanted to move my risk or adjust my risk, what I would do is usually just put it below the most recent low, and now you got a 6.85 risk to reward trade technically, right? So that is going to be something that you'll see in the live trade examples. Something super important is I'm aggressively managing my risk because, again, these are supposed to be high probability zones. So if the zone is not working out, you don't want to give it much time, right? It should work out pretty much right away. And that's, again, the beauty of this strategy. All right, so now let's take a look at an example of a short, okay? So in the previous example, we used demand. In this example, we are now going to use supply, okay? It's the exact same thing, but it's just a sharp move lower, an imbalanced lower rather than higher, okay? So you can see right here, we have this supply level. Why is this the supply zone? Because we had this consolidation candle just prior to a massive move lower, right? So we had this pause, a constriction in the market, it gets really tight, and then a massive imbalance, right? There are more sellers than buyers all of a sudden that flood the market, and so this creates a supply zone, okay? And this is not necessarily a supply and demand tutorial. I already made a video like that, so go ahead and check it out. I'll put a button up there. So this is just mainly covering my strategy in depth, all right? So we have our supply zone here, 2 levels of liquidity actually. We have this first level of liquidity, okay? It's a little bit far away from the supply zone, so not the most ideal in the world, but then actually what happens is we create more liquidity right over here, okay? People get short. It was almost a liquidity sweep there, but the market overall continued higher. Took out this liquidity, right? These previous highs. So stop losses are now resting a little bit closer to that zone. So now this is becoming more of an order zone. We tap into that area of supply and boom. We don't go all the way down to the lows, but for sure this would be a very nice profitable trade. We actually come down into this area here which is almost like an area of demand, right? An area where price immediately skyrocketed away from, an imbalance to the upside. Okay, you can see how well that actually worked as well, okay? Now, the risk to reward on this trade, let's just break it down. If we were to get in, let's just say right over here. I try to get into the zone. It's always going to give you a good risk to reward if you're in the zone. All right, so if we go to the ATR and we go back to this candle here, the entry candle, let's just call it this one. That's 14, so our stop loss is 14. I can't even see that, 14, okay? Now, here's a great example of a good risk to reward trade. Okay, now, would you have captured this all? No, probably not. You probably would have taken some partials along the way. But look at the risk to reward on this bad boy. This is 5.89 from the moment you enter. The moment you enter, you have a almost 6R trade, right? So that means you would make 6 times whatever you put in. And that, that's right when you enter. So that's not even including if you just tighten your risk a little bit. Right now you got a 12 risk to reward trade, and then eventually if you go to break even, then you have a risk-free trade, right? All right, now let's take a look at some more examples. This is our last example before we go into the live trades, okay? All right, so we got 2 perfect examples here of imbalances and order zones. All right, so we have an area of demand right here. Why is it an area of demand? Because we have obviously a massive move to the upside, a massive imbalance of buyers came in. This was actually due to the CPI numbers. Because we had a massive move higher, we create an imbalance in this area just prior. Poet didn't know it, and now there's going to be orders sitting there, buy orders sitting there. We also have a level of liquidity that forms right here, right? We have this little low here. Retail starts entering the market, retail starts buying. What ends up happening to the retail traders? Okay, they all get stopped out in one big swoop down. It was actually, it was a little bit stronger than what we usually expect. It actually came down and took out what I call the demand low, but this is still all part of the simple trader framework, okay? Why? Because what are we trying to find? We're trying to find the most orders. And if we go through this level of liquidity, we enter this area of demand, and then we take out this level of liquidity, okay, what is this telling us? That in general, this area where price is at is running into a ton of buy orders, okay? So even if it breaks the actual demand low, right, the low prior to the level of demand, it is still a valid liquidity sweep, and so it's still a valid order zone, all right? And that goes up to another area of imbalance, another order zone, okay? It comes all the way up here. I actually shorted this right at the top, right here. Join the Discord, you'll see that trade, okay? And what did we see, right? We have an area of consolidation prior to a massive move lower, all right? We have these previous lows right just before that area of supply. So where are the stop losses sitting? They're sitting right here, right? And then we have this imbalance zone. So what is this? This is an order zone, okay? We get into that order zone, chop around for a little bit. You can see we create another level of liquidity here, right? A high, and then that high gets swept, and it was a pretty hard day to trade. Definitely a day for more experienced traders. But eventually what ended up happening is we broke again through the supply levels high, right? This is what we call a supply high. All right, and then we saw this massive red candle, and then I shorted on the pullback there, and boom, capitulation all the way down, okay? Now, I hope you're starting to understand what's happening here. All we're trying to do, and this is the main takeaway, if you had to just know one thing from this video, is you just want to try to find where are the most orders sitting, whether it be stop losses, whether it be entries, it doesn't matter. Where are the most orders sitting? If you can find that, you can find high probability reversal points or continuation points, okay? So literally back to back from order zone to order zone, and then back into order zone actually, right? Back into the order zone. Oh, look at this. This is actually another perfect example. It's not even just a retest, it's a new order zone entirely, right? Here's our area of demand, okay? Some consolidation candles followed by a massive imbalance to the upside. Okay, what ends up happening? We test it, create a new low, so that generates liquidity, right? Okay, now we have a low inside the demand zone, so this becomes an order zone because stop losses are now resting below here. It takes out that low again. Maybe I should start looking into this. Maybe that's the entry point right there, the demand low. It takes out that demand low. We completely sweep those stop losses, and then boom, all the way back up. And guess where we turn around? Okay, guess where we turn around? Right here. What is that? That's an area of supply, and I wouldn't really call this, maybe there's some stop losses sitting above this little high there, but still, it's a decent example, again, of at least supply working. I don't know if I would call this an order zone, but I mean, look at this. It's beautiful. It's beautiful. I'm telling you, I've never found anything like this in 12 years of trading. Completely my own strategy. So if you see somebody talking about it, I'm telling you right now, all the gurus are coming for this strategy. They're going to, because I teach it for free, they're going to take it and run with it and charge you thousands and thousands of dollars for it. So just remember, order zones, if you ever hear that word or if you ever see this strategy, right here, all right? All right, so I'm going to show you 3 live trade examples, 3 real-time trades, okay? These were actually taken real-time, no tricks, and each one is going to show you different scenarios and different ways you can trade using this simple trader framework. Trademarked, patent pending, all right? So, all right, let's take a look here. So let's mark out what we have here, okay? One, we're already in an uptrend. That's a given. Whenever I'm buying, it's because we're in an uptrend. Okay, so I'm looking to buy. We have an order zone right here. Now, this is a little bit more complicated. Why? Because we don't really have any liquidity sweep above the zone, right? So there's not going to be those orders sitting in this zone. But what did I say? It's okay to have the liquidity sweep happen below the level of demand, okay? So we have a level of demand. To the left of this demand level, we have this low here and this low here, okay? Now look at what we do. We go down, take out all this liquidity in that area of demand, pop right back up, and now I'm looking for longs, okay? So now let's play this forward and see what happens. All right, so I see that we are starting to hold that liquidity sweep, right? So what I do is I take out a Fibonacci retracement, one of my entry techniques. I can't give away everything for free. I can't give away all my secrets, but this is one of them. All right, if I'm a little bit late to an entry, okay, if I'm not getting the exact bottom or top, what I'll do is I'll just enter on a pullback, and that will always be a 50% pullback, okay? So I get my Fibonacci retracement tool, and now I'm going to put an order here at the 50% level to try to get in on a pullback because I know this thing is likely to start running to the upside. All right, so now price is going to go up, and I put my Fibonacci retracement tool again, and eventually I get filled here, okay? Now I'm in the trade here. You can see the profit and loss. Okay, now let's see what happens, all right? Now, here's where it gets important, right? As soon as this thing starts ripping up higher, right? I start seeing the momentum. I start seeing it go higher. What do? I take that stop loss, that initial stop loss, 1 ATR, and I just bring it right up to my entry point. So I immediately get rid of all this risk because I know that this thing should start running up higher. And if it starts to chop around in here, I don't want to be a part of it because it's supposed to be a high probability zone, right? So now let's see what happens. Almost gets stopped out there, but luckily I don't. Price continues rocketing higher, and let's just keep playing it. Okay, I actually sold one here, right? Sold a partial, so now I only have 2 contracts on. All right, keep moving forward. You can see I open the Discord there. All right, we come back into the zone. Almost stopped me out again. Look at that. Almost stopped me out again. All right, so move continues. Okay, not much commentary I can make here. Continues. I'm targeting liquidity. That is the one thing that I do is I always target liquidity. Okay, but you can create your own targets. Really, it's all about the entry with this strategy. Figuring out where to take profit is the fun part after that, okay? But for me, I like to take profit, usually a third of it right when we get a nice big push, a third of it at some big level of liquidity, and then the rest of it off at an area of supply and demand or liquidity, whichever comes first, okay? And usually I'm looking for like a 3 to 1 risk to reward, even 5, 6, 10 if I can get it, right? As much as I can get, all right? So take off a little bit more there once we break through those highs. Again, that's an area of liquidity. And now we have this area of supply right here, right? This is an area of supply, consolidation before a complete disaster of a move down. So that is going to be probably the final target if I had to guess. Let's see. We start entering that area of supply. I don't even remember what happens here. I think I'll start trailing it. Oh, no. It even busts through that area of supply, and I take my last bit off there. Okay, at this next level of supply. Okay, this small little area here is also a level of supply. And so, boom, bought down in here. Look at the precision. Bought down in here. Okay, sold some, sold some, sold some. Okay, this is an easy trade, relatively easy trade to manage. It kind of went in my direction immediately. And here is the risk to reward, by the way, that I had, which was crazy. And I sold at a pretty good time, if I do say so myself. Okay, now this is on the left side here. This is a tick chart. A 1597 tick chart. I use this for my entries and to manage my trades. Again, I can't give away all my secrets. This is something that I'm also still implementing and working on creating rules around, just for reference, all right? First, define the order zone, right? We have liquidity right here. Boom. We have an area of demand right there. This is not the best area of demand, okay, but an area of demand nonetheless, an area of consolidation before an imbalance higher, okay? So we have liquidity, we have our demand, boom, that means our requirements for the order zone are met. So that is our order zone, the gray zone you see right there. Come down, take out that demand low again. I'm picking up something new here. The entry might have to be below here. That's funny. I might make changes to this strategy because I'm recording a video on it, which could make it even better. So price comes into the order zone, and on the tick chart, you can't really quite see it here. I guess I'm already at a break even. I might have started recording this after I already entered. But on the tick chart here, you can see I bought right up here. Not the best entry in the world, but on the time frame chart, or on the time chart, it's right there, right? The blue line. So this is my entry on the time chart. This is the same exact chart. It's just a tick chart. So that's why it looks different. Okay. So I bought here and I already sold some here. You just can't see it on the time chart. Okay. So basically what I'm saying is I bought some here and I already sold one right around here. So this trade is already a risk-free trade. That's, again, the power of these zones. You can get in and almost immediately go to a break even. All right, so let's see what happens with this trade. I'm already risk-free. All right, so I hit the 50% retracement there. All right, so this black line here, you see right there, that is where I actually sold another one. Okay, because I saw that we had this massive move lower here, okay? Massive move lower there tells me that there could be some selling pressure to the downside. So what I did is, I'm not going to wait for these highs to get hit. I'm just going to wait for a 50% retracement of these two levels, right? So the midpoint is right there. And so I took another position off there, another contract off. So now I only have one left. See how it goes. Okay, now what I'm doing here is I'm trailing my last contract. So because I don't have full confidence that this is going to hit my last take profit, okay, which is up here, right before this level of supply, or right at that level of supply. Okay, so what I do is I start trailing on my tick chart, okay? This is, again, a little more advanced, but this is just speaking to the idea that you always want to be kind of locking in those gains, taking risk off the table. And so let's see what happens here. Okay, continues moving higher, and I continue to trail there, and I get stopped out there. So again, another nice trade. But now the next example, okay, the next example is going to be where this strategy really shines through, where this framework shines through, because it is a day where I got absolutely chopped up. Price was going up and down, up and down, up and down. I lost multiple times in a row, and I still came out on top from just one winner. Having one winner changed everything, all right? Now at this point, you should be realizing how this strategy kind of works. I'm basically entering in the order zones, using very aggressive risk management, and then targeting areas of liquidity where price may potentially reverse, okay? Areas of liquidity or other areas of supply and demand. It all hovers around supply and demand and liquidity. Now let's take a look at this trade right here, because this trade is not going to be as easy, and it's not just one trade. Okay, so to preface this day, we have an area of demand right over here, right? Clear area of demand. Okay, so as you can see by the magical arrow, we should get down to that demand zone, and if we do, I am starting to look for longs in that area, okay? If we can also form liquidity. So let's play this forward. All right, so here we are just before that area that I mentioned earlier. You're gonna see we tap into that area and we start getting an immediate rejection. So I start looking for a long entry, and you can see I'm gonna put my limit order just beneath this previous small low here. All right, and let's see if I get filled. Okay, let's see, come on, and I get a fill there. Okay, so perfect entry by the tick, bottom ticket, immediately go to a break even. Now I'm actually going to break one of my rules here. It's going to come back down, and I'm actually going to move my stop loss, not back to a max loss, but about half of my initial risk. This is not something I would recommend doing, but I just felt like this needed more time. I felt like it was going to sweep through my entry point first before moving higher. All right, so that's why I was just giving it some more room to breathe. Okay, there's that sweep lower, and then we start moving higher. I start adjusting my stop loss, always taking risk off the table. Okay, and then we actually come back down in. Let's see if we can survive this, and I actually get stopped out. Now, look at how small that stop loss is. Maybe just a few points there. So that was barely anything. Now, this is going to be key later on in this trading day. All right, so now I've just skipped forward a bit. I actually don't know what these two shorts are or sells are. I actually don't know what that is. But I do know that this was a small loss here. I'm not quite sure why this is showing shorts. To be honest, I don't remember. But let me break down what we're seeing, okay? We're still in that area of demand, that first level that I marked out in this trading session, okay? But now we swept through these lows, right? We took out all this liquidity right here. So now I see that we're back up above the zone. So now this is some good confirmation that the zone should be holding, okay? Now, something that I always preach is don't just set a limit order on the zone for exactly this reason, because sometimes you'll get a big spike in and right through it and then start the move. So I always like to look for confirmation like a nice V bottom or some sort of clear indication that we're building strength. Usually I can see this on the tick chart. So again, can't give away all my secrets, but if you join that Discord, maybe you'll get lucky, all right? All right, let's move this forward here, and we do get filled there. Okay, and let's see if we can survive this. Look at that small stop loss. We're not going to survive, are we? Boom. Okay, so again, another loser here. But look at how price is behaving. Again, we sweep through some liquidity and we're rejecting, okay? So I know that now there should be some sort of move higher. I just don't know exactly when it's going to happen, okay? So I get stopped out there again for my second or third loss of the day. Now, again, I re-enter because we're showing signs of strength. And let's see if I'll survive this. And it looks like let's see if I survive this. I re-entered and it doesn't look like I'm going to survive this. Let's see. And I got stopped out again. So again, this is my third stop loss in a row. Okay, third stop loss. Third stopped out trade, maybe even fourth. I don't know why. I don't know. Maybe these other entries were losers too, but 3 or 4 losers in a row. Keep that in mind, okay? But because I use really aggressive risk management with this strategy, that all is not going to matter because I know once I get the right spot, it's going to be easy to make all that back. So now look, what I've done is I've taken another area of demand, okay? An area of demand sitting right there. This is on the 2-minute time frame. You have this small consolidation candle prior to a massive run-up. So this is where imbalance happened. And then we also have these lows right here, right? So what is this? That is an order zone. So we enter that order zone again, or for the first time, and let's see what happens here. All right, so we're in that order zone. I keep switching to the Discord. I put my limit order in because it's starting to hold. I can see it holding, right? You get some confirmation. Now it starts to skyrocket away without me, and look at what I do, okay? I take my Fibonacci retracement tool, and I start looking for that pullback trade, right? This is if you're late to a trade, this is what I do. Just buy on a pullback, okay? Because I see the strength in the price, right? Because we see that the order zone filled really nicely and we took out that liquidity, okay, we know that this move right here could be the start of a massive reversal, okay? Because we took out all the retail traders. All right, so let's see what happens. All right, so I place a limit order a little bit lower. This is just because I saw that price had some momentum to the downside. All right, so I placed it a little bit lower, got lucky there, and I got filled right at the bottom. Now let's watch as this progresses. There's my risk to reward, right? So again, super crazy risk to reward. That's the beauty of this strategy. And boom, okay, now I'm gonna go to a break even more than likely, knowing me. Okay, there's my P&L. It's actually a red day. Perfect, you can see the P&L, right? You can see I have a realized profit of 500. 500. Is that 500? 500 on a few accounts. Okay, realized profit of 500 on a few accounts. We're currently up 240. Okay, in just a few points higher. All right. So again, that's the beauty of the strategy. All right. So there, you can see that in real time. You can see that I'm down on the day, but again, all it takes is one good trade. Okay. So let's see what happens here. I'm at a break even now. I got 0 risk on the table. And boom, okay, out for a break even. Ooh, that hurts, right? That hurts. I thought that was going to be the trade to win it all. So let's see what happens. Let's see what I do about it. Okay, we still see price holding that area. We know that price may have to go lower. We start forming that liquidity, and again, look to the left, another area of supply. Okay, an area of supply right here, right? Small consolidation before a continuation. Now, not the best area of supply, I will admit. That is not the strongest area. But we also have this really strong area of liquidity, right? We know that traders are going to have stop losses below that very clear low there. And so this is an area where price is likely to have a sharp reversal. And we all also know that price has shown some signs that it wants to go higher, right? So let's see what happens here. All right, so boom, we take out those lows, liquidity sweep, put a buy order in. I see the area starting to hold. I enter there. Stop loss is 10 points. You can see I measure it out right there, 10 points. Okay, perfect entry. Start immediately going in our favor. Boom, tighten up that risk. I'm selling some. And then let's see if I go to break even. I should go to break even. Boom, now I'm at a break even, okay? Now, we have levels of liquidity just above us, right? So I'm going to be targeting this area, this area, this area. All of this liquidity here is where we expect price to move to, okay? Because we have to go stop those traders out, all right? So let's see what happens here. I have 8 contracts on. So we keep going higher here. Boom, okay? Massive spike up higher. Look at that risk to reward. We're now up 300. You can see on the day, I'm starting to break even on the day. All right, and we're going to keep holding, keep holding, keep holding. We want to target that higher liquidity. Look at how close it got to breaking even, and look at this, okay? We start coming back all the way up to these highs, targeting that liquidity. Still down on the day. Look at this, comes back down almost to my stop loss, but I know that this should go and take out all these traders' orders that are sitting up there, okay? And let's... No way, I actually totally forgot about that. 1 tick away from being stopped out for break even. I actually was selling some all through those small moves higher, as you can see by the executions. And let's see if we can get those final few points, final few moves. Okay, will we get it? And I start selling more because I'm starting to doubt it. And we should, boom, all out there. Oh no, not all out. Come on, get all out. Oh, I start trailing. Wow, okay. I forgot about this. All right, start trailing. Okay, again, just making sure that I get the maximum amount of money out of this trade. And boom. Okay, now final P&L, apart from 2 Apex accounts, I went from being down 500, 4 losing trades in a row, or 3 or 4 losing trades in a row, which is super abnormal for this strategy. Like I said, it's high probability high probability areas. Okay. And we went from minus 500, 4 losers in a row, full losses pretty much. 4 losers in a row, and we actually managed to end the day green on most of the Apex accounts, okay? Some of them, I think these were not being copy traded or something. So, I don't know what happened there. But these Apex accounts, by the way, were passed. Let me just put that right here, okay? All those Apex accounts were green on the day, okay? Speaking of which, if you want the latest and greatest discounts on any prop firm accounts, check out the prop firms that I have in the link in the description down below. Use code SIMPLETRADER with Take Profit Trader. They're the best by far to get 30% off. And then at Apex, they're the cheapest. Get the best practice if you're a beginner with code ST, again, for Simple Trader. That's pretty much it. That is all I have for this video. Extremely long yapping session. Thank you guys so much for watching. Make sure to smash up that like button and subscribe if you enjoyed this strategy. Literally can change your life. So I don't know what else I can do, guys. Join up the Discord, smash up that like button, and I'll see you in the next video. Peace.